Hello everyone, I am Shweta Ahuja, Assistant Professor with Management Education and Research Institute. Today I will take you through an interesting topic which is digital banking and its integration with artificial intelligence. Before throwing some light on the relationship between digital banking and AI, let's take a step back and I will briefly talk about what both the topic mean. Firstly, introduction to digital banking. Digital banking refers to the digitalization of traditional banking services, allowing customers to access financial products and services through online platforms and mobile apps. This method to an extent eliminates the need for physical bank branches, providing users with convenience, speed and accessibility. Over the past decade, digital banking has evolved significantly, transforming how individuals and businesses manage their finances. This transformation is largely driven by advancement in technology, particularly in artificial intelligence, which has revolutionized the way banks interact with their customers and manage operations. Coming to the role of AI in digital banking. Artificial intelligence play a pivotal role in enhancing the efficiency and effectiveness of digital banking. By integration AI technologies into their system, bank can automate routine tasks, improve customer experiences, reduce operational cost, and make data-driven decisions. Next slide will show some key areas where AI is transforming digital banking. First one is customer services via chatbots. One of the most prominent applications of AI in digital banking is in customer service. AI-powered chatbots and virtual assistants that provide instant responses to customer inquiries, reducing the need for human intervention. These chatbots can handle a wide range of customer concerns such as account balances, transaction history, loan applications, checkbook request, password reset, account locks, and much more. There are multiple advantages of having AI in place instead of human, which I will mention one by one. First is 24/7 availability. This factor saves the bank from keeping employees during odd working hours or night shifts, hence becoming a cost-effective method. Secondly, faster response times. There is no need for customer to suffer longer wait times in the call queue to wait for his turn, since one chatbot tool can handle multiple customer requests at once. Personalized interactions, client can get to talk to chatbot and have a service request number generated at the end of conversation ASAP. Reduce customer service cost. Since AI helps to reduce the cost of manforce, other than that it also saves the bank's money spent on IVR technology, etc. Many banks have implemented AI chatbots such as ICICI Bank, IPL and HDFC Bank EVA to assist customers with their banking needs. Coming to fraud detection and prevention, another area of AI integration with digital banking. AI is instrumental in identifying and preventing fraudulent activities in digital banking. By analyzing large volumes of transactional data, AI system can detect unusual patterns and flag suspicious activities in real time. Now, how it works? AI models analyze customer behavior and transaction history. They identify anomalies such as unusual login locations or high-value transactions. The system alerts the bank and the customer, allowing for immediate action. Let's have a look at the benefit it provides. Reduced fraud time, real-time monitoring, improved security. American Express uses AI to analyze millions of transactions daily and detect potential fraud cases before they escalate. Next impactful spotlight comes on personalized banking services, which also showcases how digital banking and AI can work under the same umbrella. AI enables banks to offer personalized financial products and services based on individual customer needs and preferences. By analyzing customer data, AI algorithm can provide tailored recommendations such as saving plans, investment opportunities, and loan offers. How it works? AI collect and analyze customer data including spending, habits, income patterns, and financial goals. Based on the analysis, the system suggests personalized banking solution. Now, benefits of personalized banking services are enhanced customer satisfaction. Next is higher engagement rates, better financial planning for customers. HSBC uses AI to offer personalized financial advice to its customers through its digital platforms. Let's talk about how credit scoring and loan approval plays a role in defining the relationship between AI and digital banking. AI is transforming the credit scoring and loan approval process by using alternative data sources and machine learning model to assess the creditworthiness of borrowers. Traditional credit scoring methods rely heavily on historical credit data, but AI can analyze non-traditional data such as social media activity, utility, payments, and online behavior to make more accurate predictions. How it works? AI model evaluate various data points to determine a borrower's risk profile. The system automates the loan approval process, reducing the time required for decision making. Let's have a look at the benefits it provides. Faster loan approval, more accurate risk assessments, great financial inclusion. So next is risk management and compliance. AI help bank manage risk and comply with regulatory requirements by automating risk assessment and monitoring compliance. Regulatory compliance is a critical aspect of banking, and failure to comply can result in hefty fines and reputational damage. How it works? AI system analyze regulatory requirement and ensure that the bank operation adhere to them. They identify potential risks such as market volatility and suggest mitigation strategies. Benefits are reduced compliance cost, enhanced risk management, proactive identification of potential risk. Standard Chartered Bank uses AI to monitor regulatory changes and ensure compliance across its operation. So next one is automation of routine tasks. AI can automate various routine tasks in digital banking such as data entry, account management, and transaction processing. This automation not only reduces operational cost but also minimize the risk of human error. How it works? AI powered bots perform repetitive tasks, freeing up human employees to focus on more complex activities. Machine learning models continuously improve the efficiency of these tasks. Benefits are: first one is increased operational efficiency, next is reduced human error, and the next one is lower operational cost. Citibank uses AI to automate back office tasks, improving overall efficiency and reducing cost. Now, I will bifurcate just the benefits of AI integration in digital banking by positioning them as per banks and customers separately. The integration of AI in digital banking offers numerous benefits to both banks and customers. Firstly, for banks, cost reduction. One of the most significant benefits of integrating AI in digital banking is the reduction in operational cost. Bank can reduce labor expenses and human interventions by using chatbots to automate time consuming and repetitive tasks, including transaction processing, data entry, compliance checks, and customer care. Artificial intelligence powered computers can complete these jobs faster and more precisely than conventional technique, reducing the need for large back office workers. Next one is improved security. By improving cyber security and fraud detection procedures, artificial intelligence significantly contributes to the strengthening of security measures in digital banking. Large amount of transaction data may be analyzed in real time by advanced AI algorithms, which can spot trends and abnormalities that might indicate fraud. For example, AI can detect unusual spending behavior such as multiple transactions from different locations within a short period and trigger alerts or temporarily block accounts to prevent fraud. Additionally, AI powered authentication methods such as facial recognition, voice recognition, and behavioral biometrics provide an added layer of security beyond traditional pins and passwords. These technologies make unauthorized access significantly more difficult, safeguarding customer data and financial assets. Next is better decision making. AI gives banks the ability to make better decisions by offering predictive analytics and data driven insights. AI can spot possibilities and threats that conventional analysis techniques might miss by examining past data, market patterns, and consumer behavior. For example, in lending decisions, AI can assess a borrower creditworthiness by examining a wide range of factors, including behavior and even social media activity. This enables banks to make fairer and more accurate lending decisions, reducing the likelihood of defaults while improving access to credit for underserved population. Next one is increased efficiency. AI significantly enhances operational efficiency by automatic routine and repetitive tasks. Processes such as account opening, document verification, compliance checks, and customer inquiries are streamlined through AI driven automation. For instance, chatbots and virtual assistant can handle a high volume of customer queries simultaneously, providing instant responses and freeing up human agents to focus on more complex tasks. For customer benefits are helpful to solve user inquiries. Instead of looking for some button or features manually, a user can ask AI questions and get answer in conversational mode. For example, they want to know their account balance or generate report on their expenses. Instead of going through an extensive user flow to complete these actions, a user can refer to banking AI and instantly get all the data. This saves the user time, decreases the efforts needed to make an inquiry, and increases the convenience of services. Next is helpful in financial planning. AI can also be used by a client to facilitate their financial planning. By asking the chatbots, a client can learn more about growing investing trends, financial opportunities in their sector, and more. In this regards, AI in banking will serve as a free financial advisor, giving the bank more competitive power. And the next one, credit score management. The AI bank can also help with credit score monitoring. Bank and financial institution create AI powered chatbots that client can use to check and improve their credit rating. Anytime they can refer to the chatbots to get advice and how to repair their credit scoring. After that, security implementations. AI has the potential to improve security. AI can examine bank accounts activity and alert users automatically if any suspicious activity is found. AI technology can also be used to process and obtain action confirmation. AI in banking can prevent breaches in customer data and funds when used in combination with other security measures. Next is financial operation. Users can use AI powered chatbots to enable finance related operations. For example, they can ask the AI to do a money transfer to someone else's accounts or their accounts. They also can ask the chatbots to complete the payment when making order online. Instead of typing in the payment detail manually, users can delegate this responsibility to AI and save time. Client support is also the another benefits for customer. AI powered chatbots can be implemented by bank to ensure high quality customer support 24/7. First, a user will be referred to artificial intelligence to solve their query. In case AI cannot help, a user will be connected to a human assistant. Such a strategy will save a lot of employee time that is usually spent on number of tasks and questions. Besides, client satisfaction rates will be rise since they will get responses to their questions quickly. Loan applications management. From the customer side, the users of AI will be beneficial. They can refer to the chatbot for guidance and information concerning the loan applications. Anytime they will be provided with support and tips on how to facilitate the process. Account management. Artificial intelligence banking can be trained to help users manage their accounts. For example, a model can be trained to modify bank information, set up automatic payments, and send alerts when it's time to make payments, among other things. Client will use the technology rather than requesting that management complete the task by hand, which will increase efficiency and reduce cost. And the next is insurance management. It takes a lot of time for a client to make an insurance claim. What's more, this process is typically accompanied by a lot of paperwork and numerous checks. To streamline this process for both banks and customer, companies can implement AI chatbots. With this solution, users will get the claim procedure checklist, make sure they comply with the rules and submit their applications. Now let's throw some light on all the above pointers discussed via a banking sector example, or in other words a case study. This case study examined the transformation of digital banking through the integration of AI, focusing on a real-world example of a leading bank that successfully leveraged AI to enhance customer experience, improve operational efficiency, and mitigate risk. The bank is focus here is DBS Bank, that is Development Bank of Singapore. Their objective is to become a digital first bank by integrating AI across its digital banking platform. DBS Bank faced challenges with scaling customer support. The growing customer base demanded faster and more efficient services. Fraudulent activities, increased digital transaction, heightened the risk of fraud, personalization, generic banking services were insufficient to meet individual customer needs. And the last one is operational cost. Operational cost, manual processes increased cost and slowed response time. Now, talking about DBS Bank's AI integration approach. First one is chatbots and virtual assistant. If I talk about implementation, DBS launched an AI-powered chatbot, DBS DigiBank Virtual Assistant. And about functionality, the assistant answered customer queries, processed transactions, and provided financial advice. Now talking about outcome, achieved 90% automation in query resolution, reducing reliance on customer support team. Next is fraud detection and risk management. If I talk about implementation, machine learning models were deployed to monitor transactions in real time. Its features are analyze transaction patterns for anomalies and flag potential fraud instantly. Now talking about outcome, fraud detection rates improved by 60%, saving millions in potential losses. Next one, credit analysis and loan approvals. Talking about implementations, AI algorithms analyze known traditional data sources, example, utility payments, social media activity for credit scoring. And about outcomes, faster loan approval and inclusion of previously underserved customer segments. After that, personalization and predictive analysis. AI tools analyze customer data to offer tailored products such as saving plans and investment options. 30% increase in cross-sellings of financial products. Now talking about future prospects for DBS Bank. Voice banking. Development of AI-driven voice assistant for natural language banking interaction. Blockchain integration. Combining AI with blockchain for secure, transparent transaction. Hyper-personalization. Further refining AI models to create highly customized banking experiences. There is a flip side to this integration of AI integration in digital banking as well. Despite its benefits, integrating AI in digital banking comes with some challenges. The first challenge worth your attention is the security of client data, security of banking data, and operation is a top priority for this industry. When integrating banking services with third-party AI solution companies open access to their client data. This is why the AI-powered solution should be wisely chosen by a professional team experienced in AI development. What more? Banks should ensure that the interface they use to connect their apps with AI is secure and that user data as well as finances are protected by additional security measures. The next challenge is preparing the AI model to serve the banking industry. The banking and finance sectors have their own terminologies and context. Before integrating AI with banking services, it's important to train the technology with relevant and up-to-date data. Lack of effective training can result in AI providing insufficient answer to queries. The high cost of implementation and maintenance is another significant challenge. Setting up AI infrastructure, acquiring advanced software, and hiring skilled professionals requires substantial investment. Furthermore, Maintaining and updating AI model is an ongoing expense. For smaller banks, the financial burden can be particularly overwhelming and the return on investment may not be immediate, creating a barrier to adopting AI at scale. Another important issue is the quality and availability of data. AI systems require clean, accurate, and comprehensive data for effective decision making. Poor quality and incomplete data can lead to inaccurate prediction, flawed decisions, and customers' dissatisfaction. In many emerging markets where digital records keeping is still developing, generating and collecting sufficient data poses a significant hurdle. Additionally, many banks still operate in silos, making it difficult to aggregate data from various departments and channels for AI processing. AI systems are also susceptible to algorithmic bias and fairness issue. The training data for AI models may carry historical biases which can result in discriminatory decisions such as unfairly denying loans or credits to certain demographics. Ensuring fairness and addressing biases require continuous monitoring and refinement of AI models, which adds complexity and cost. The lack of transparency and explainability in AI decision making is a significant concern, particularly in the financial industry where regulatory scrutiny is high. This lack of clarity can make it difficult for banks to explain to customers why a particular decision such as loan rejection was made, leading to dissatisfaction and distrust. Moreover, regulators often demand transparency in AI system, creating an additional layer of compliance challenges. The introduction of AI also presents workforce-related challenge. The implementation of AI-driven system often leads to job displacement, particularly for routine tasks such as customer service or basic transaction processing. While automation enhancing efficiency, it can reduce workforce morale and create resistance to change. Additionally, the successful integration of AI requires a skilled workforce capable of managing and maintaining these advanced systems. Upskilling existing employees to meet these demands is costly and time intensive. Further, straining resources, customer acceptance, and trust are critical factors in the success of AI in digital banking. Concern about data privacy, decision making, transparency, and the lack of human touch can contribute to skepticism and hesitation in adopting AI powered services. Last but not least, it may be challenging for banks to encourage customers to start using AI powered services. Clients may be unaware of the benefits and convenience that AI may bring. This is why it is important to create an appealing user interface that will grab user attention and demonstrate all opportunities one can get with an AI bank. All said and done, the future of digital banking with AI will be heavily influenced by advancements in AI. Here are some trends to watch. First is hyper-personalization. AI will enable bank to offer hyper-personalized services based on real-time data analysis. Customer will receive tailored financial advice, product recommendation, and promotional offers. AI will analyze customer data to anticipate needs such as recommending tailored saving plans, investment opportunities, or loan products. AI powered virtual financial assistants will offer on the spot advice such as notifying customers of unusual spending or guiding them on achieving financial goals. Next is autonomous banking system. The future of digital banking will be largely autonomous with minimal human intervention required for routine tasks. AI system will automate financial decisions like investment rebalancing, bill payments and saving allocation based on customer preferences and financial health. Loan approval, disbursement and repayment will be managed entirely by AI, reducing processing times to seconds. Next one is financial inclusion through AI. AI will help bridge the gap for underserved populations, making a banking accessible to a broader audience. AI will use alternative data like mobile payment history, utility bills, and social media activity to assess creditworthiness for those without traditional credit scores. AI driven voice and chatbots in regional languages will make banking accessible to individuals in rural or underbanked areas. Next is voice banking. Voice activated banking services will become more common, allowing customers to perform banking transactions through voice commands. Voice banking is particularly beneficial for people with physical disabilities or those who find it difficult to navigate traditional banking platforms. It also offers the convenience of performing banking activities while multitasking. Next, predictive analytics. AI's predictive capabilities will transform how customers manage their finances by analyzing historical data and pattern. AI will be able to predict future financial needs such as bill payment, loan repayment, and investment opportunities. For instance, AI can notify customer about upcoming bills or potential overdraft situations, giving them enough time to take corrective actions. It can also predict the likelihood of a customer needing a loan or financial advice based on their spending pattern and goals. And the next is blockchain integration. AI will work alongside blockchain technology to enhance security, transparency, and efficiency in digital banking. By combining blockchain ability to securely store and validate transactions with the AI predictive and analytical capabilities, banks can significantly improve the accuracy and speed of financial operations. For example, AI can identify potential fraudulent transactions on the blockchain by detecting unusual pattern in real time. AI in customer support and virtual banking assistants. AI powered virtual assistant will transform the customer service experience. Intelligent chatbots and voice activated assistants will be used in banking in the future to communicate with clients in real time, answering their questions and resolving issues quickly. Complex tasks including helping with loan applications, monitoring investment, giving advice on budgeting, and even leading financial planning sessions will be within the scope of these assistant skills. AI will also be utilized to anticipate consumer questions and proactively contact clients with relevant data such as notifying them to upcoming payments or offering strategies to maximize their savings. These virtual assistants will develop more over time, improving emotional intelligence, comprehending tone and context, and having conversations that sound natural and human. So, what conclusion are we able to derive after this session? The integration of AI in digital banking is transforming the financial industry by improving customer experiences, enhancing security, and optimizing operations. As AI technologies continue to evolve, banks will need to address challenges related to data privacy, ethical concern, and implementation cost. By embracing AI, banks can stay competitive in the digital era and provide more personalized, secure, and efficient banking services to their customers. Happy learning. Have a nice day.